Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the show, where we interview the nation's leading real estate entrepreneurs and those that serve the real estate industry. It's your host, Stephen Schmidt, back at it again. And I got a real treat for you guys, as I typically do. If it's your second, third, or 100th episode, welcome back to the show. And if you're finding us for the first time, I'm sorry that you didn't find us sooner. Where have you been? We're glad to have you. You're going to get a ton of value out of this episode. I got Vince Porter in the house, and Vince is an absolute titan in the real estate investing and the tax professional space. And we're going to get into some really interesting things today about his experience, especially working with syndications, investing himself, but also in being a tax pro for the last 20 plus years. And there's, as many of you know, plenty of ways that you can, let's just say, because I'm not in the space, that you can circumvent or use the tax code for your own benefit, as we would probably say, compliantly, since I'm not licensed. I'll let Vince do the talking there. But just before we get started, remember, at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses so they can build the businesses they've always wanted in order to live the lives they've always dreamed of. With that being said, Vince, welcome to the show today. It's a pleasure to have you.
Thanks, Stephen. I appreciate the opportunity. I'm looking forward to chatting, and I think you hit the nail on the head. It's real estate space has a lot of big tax opportunities, and we can kind of talk about as much as you want or get into it, and I'll give you my 2 cents on it.
I will pick your brain 3 parts from Sunday, so if it gets too nerdy for you, you just let me know. But I guess
we just don't lose listeners. I'll nerd out with you as long as you want to.
I love it. So let's do this. Let's at least to give some background. Right. Let's give our listeners a little bit of background on you. How'd you get started in the tax space? What made you decide that to pursue as a career? Yeah. How did that evolve into your own real estate investing, and then you working with syndicates, and then we can get into all the other nitty gritty IRS code 75.234 later on in the show. Tell us a little bit about that and how you got to where you're at.
Yeah, we'll leave all the code section talk to the other accountants, but glad to be here. So going back to turn of the century, I graduated, went to Arson McGladrey, a big firm, and they stuck me in the corner, and I did nothing but commercial real estate tax returns for like the first 4 years of my career.
No kidding.
Absolutely hated it at the time because I only saw this one subsection of the tax code, but I got really good at it, and I knew I was going to leave to join my father, and I did that in 2005. Been here for the last 20 years managing the practice. But what I was able to do is really understand the nuance of passive activity loss limitation, cost segregation, all of the things that go in to making real estate what it is. So I parlayed that technical knowledge I learned there into our practice here. And then when '08 hit and the mortgage crisis blew up, I had a lot of entrepreneurial clients that started jumping into multifamily.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And I was like, hey, this is where I can help. Have you ever heard of this, a cost segregation study? Here's what it does. Here's how you use it. Have you heard of low income housing credits? Have you heard of this, this, and this? And I was able to parlay my knowledge, really help our clients make a lot of money. And that in turn got us to the point today where we're doing about 10,000 K1s a year across several hundred partnerships, whether it be big syndications in multifamily or commercial space. And we've just been growing there ever since. And I got tired of sitting on the sidelines and doing all these tax returns and seeing these guys make a ton of money, and I wanted in on that action. So, by 2016, I started investing with some of my clients in syndications, and then eventually bought some short-term rentals myself to take advantage of the tax code, and here we are.
What do you like, Vince, about the syndication model of being able to put your money in, even if you're not necessarily, an experienced operator? Obviously, a lot of them only will take accredited investors, minimum amounts, et cetera, just to kind of keep
Yeah.
things kosher. But what do you really like about the syndication model?
Well, I think the biggest thing that I really enjoy is obviously whatever capital you have is certainly important to you, but you can passively invest into that and get returns and let somebody who's experienced, that knows what they're doing, has navigated the ups and downs of the real estate market, let them manage that money for you. And I really fundamentally do like it more than shoving my money into an IRA fund, or I do like IRAs, but the stock market, and just letting the hedge fund managers control that, at least with the syndication route or with real estate investing directly myself. I've got a real tangible effect on how that dollar goes. And, selfishly, it's pretty cool to drive down the street and see this big 300 unit complex and say, hey, I got a piece of that. And I like that.
Yeah, 100%. It's ownership. It's the American dream, as they call it, right?
Yeah,
So,
you don't get that with Tesla or Microsoft if you drive by their headquarters and you got stock in them. It's
right.
you know
They don't know you from Adam. Well, I mean, they still don't in the apartments, but, still. It's something physical you see and go, I own that, right? I
yeah,
totally get it. It's like a more advanced way for all you folks with a construction background of when you used to work on the pipeline and you built a casino and you drive by it and go, I put in the pipes over there, and you're like telling your 6-year-old that. You can't tell that's what I did at all when I was straight out of high school or anything, but
yeah.
fun piece. So let me ask you this: as far as like tax advantages go? What's one of your favorite tax advantages within the real estate space that you think anybody that's investing in whatever it is specifically should be taking advantage of that maybe they don't know about?
Yeah. How much time you got? I I'll start out with my blanket philosophy of this. So
Yeah.
to really understand the tax code and take advantage and pay the lowest tax possible, you kind of need to understand what the government's doing. And the single biggest way that the government influences the economy is through tax policy. We're seeing it right now as the House has put it through a big bill that's going to the Senate that's got big depreciation deductions and a lot of real estate favorable things. But um, businesses and investors move the economic needle. You and I with our W-2s don't. And that's where the tax code lies. The the government wants to fill up, say, a multifamily property with 300 people that are going in there, earning W-2s, they're going to pay taxes at a high rate.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
They want those high employment numbers because it makes politicians look good. So in turn, they scratch a real estate investor and landlord's back by giving them huge write-offs on depreciation. I don't know how well versed your team is or your listeners are in cost segregation depreciation, but just at a high level view, it allows you to write off quite a bit of money inside a real estate deal versus other things. And if you structure it properly, that can be offset against your other income. That's a whole nother podcast, but it's a great way to shelter cash. And you might still be cash flowing on a property. Hopefully you are if you picked it properly, but you're going to show paper losses on your tax returns. You're not going to pay taxes on that. And then you get all sorts of other deferrals, whether it's 1031 exchanges or whether there's ways to structure these assets so that you pay the minimal amount of tax as possible. So it's really fundamentally one of the biggest ways, and the government loves real estate because, in single family space, they want people earning W-2s. In this building I'm sitting in right now, they want to fill it up with businesses that have people working, paying taxes. So they give the landlord big write-offs on that.
Yeah, 100%. What what do you like about the short-term rental space? I know it's been around forever, but
Yeah.
really the last, let's be frank, 10 to 15 years once Airbnb started getting, more popular, more widespread.
Yeah.
Um, what do you like about the short-term rentals, which you personally invest in, versus like long-term rental, midterm, et cetera, and do
Yeah.
they have any significant tax advantages to them?
Yeah. Yeah. I mean, cash flow and numbers aside, taxes are phenomenal. So I promised I wouldn't nerd out with you, but to explain why I like short-term rentals, let me nerd out for 2 minutes. So the IRS taxes you in three different ways. They tax your active income. That's going to be your W-2 income, and that's going to be businesses that you are actively involved in. The term is material participation, but we're not going to walk down that nerd route right now. They tax you on your portfolio income. This is interest, dividends, and capital gains you get from the stock market. And finally, they tax you on your passive income. This is income from activities you invest in that you do not have active participation in. Maybe you're just putting money in and you're getting activity from that. Real estate, fundamentally, by letter of the law, is passive. Unless it's not, you're a real estate investor, it's passive. And the reason this is important is because passive losses cannot offset active income. So if you have real estate losses that are passive and you have a big W-2, you can't mesh those two. You can't offset that. So um, there's ways to go through it, and I can walk down that. But the nice thing about a short-term rental is that it's nuanced in the tax code like a hotel. So it's not in the same realm as real estate. What that means is if you're managing that short term rental, you get all the same benefits that real estate provides you. You can do a cost seg on it, you can rack up a lot of losses, and then you can use those losses to offset your active income. So take me, for example, I'm a CPA. If I wanted to take real estate losses from a short-term rental, I could not because I'm spending 40 hours plus, let's be honest, working in the
Sure.
CPA practice. To do the same thing to get the losses from real estate, I would have to do at least that or more. And I'm not going to do that. And my wife, who I love very much, could be a real estate professional, but she doesn't want to do that with her time either. But if we have a short-term rental, we can do that as long as we're actively managing that thing, and it's fairly easy. So
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Short-term rentals have a little nuance there that you can really take advantage of the tax code, where some of the other real estate investments get sucked up into some passive loss limitation rules, which again is a little nuance in there, but it's a big one.
Sure. Can you give an example of like a fair comparison of that? Like what you mean by some of the others?
Yeah. Okay. So let's say you got $100,000 to invest, and you got two options. You've got a passive syndication deal to go buy this Class A property in downtown Dallas that's worth $1 trillion, or you could put that $100,000 into, let's call it, a $500,000 short-term rental. Okay. And let's say you and if you're married are not real estate professionals, and we can walk down that route, what that means, but basically you're not real estate professionals. Well, if you invest into that syndication, you're going to put that $100,000 in here, and hopefully we get back to 100% depreciation, which means you might get a K1 loss in year one. It could be, it could be 60, 70, 80% of the value of that money you put in. So you'd get a paper loss of 60, 70, $80,000 in year one. But since it's passive, you cannot take that loss against your active income, W-2, other business income. So what happens is that loss gets suspended, and you don't lose it. It's just carried forward in the future. And then it only gets used when you have passive income, or when the deal itself sells or goes away. Then those passive losses are unlocked. Okay, so that $100,000 provides you no tax savings in the syndication. If we do that same thing in the syndicate, in the short-term rental, $500,000 house, 400,000, you're probably going to get, maybe call it $100,000 deduction. Let's say you're able to take that full thing. You're in the 37% bracket. It's going to save you $37,000 in tax in year one. So that $100,000 you put in only costs you $63,000. And guess what? That $37,000 it saves you, you're getting that money today, not 2, 3, 4, 15 years down the line. So you got the time value of money working for you. So you can then deploy that $37,000 and go get another investment, or, do whatever you want to with it, instead of having it held up with the IRS.
Yeah, that totally makes sense. Because this is something I actually even recently learned. I've been an entrepreneur, contractor, whatever you want to call it. I haven't filed a W-2 for a full year in, I don't know, 5 years maybe. And so on that note, I didn't realize that even some people that are, let's say, a higher earner on a W-2 that are getting shredded alive by taxes could, in some cases, and I'm not a financial professional, Vince is, so this is just for educational purposes only, um, is that you could actually offset even your W-2 income through real estate. And tell me if I was wrong in how I interpreted this,
Yeah,
but you could almost entirely offset what you make in a given year if you invested properly. Is that incorrect?
absolutely. Now to kind of clarify that and nerd out on the tax side for you. So that passive loss limitation I was explaining, passive losses, which real estate and the tax code are passive, cannot offset active income. So the way you get around that is maybe your spouse or the non-working part of your couple can be the real estate professional. And for quick summary, a real estate professional in terms of the tax code doesn't mean you have a real estate agent license or anything like that. It means you spend 750 hours a year working in real estate. And that equates out to, I don't know, 15, 20 hours a week on average. And then you spend 50% or more of your working time in real estate. So if you're a full-time CPA like myself working 40 hours, even if I'm at 750, I'd have to work 40 plus in real estate to be a real estate professional. And there's court case after court case that have thrown that out. But your non-working spouse, if they're not working at all and they're willing to put in that work, they can become a real estate professional. And that's where the real magic happens, when you can start unlocking some of those losses that you've made, even through syndications, if you're on the GP side of it or doing some of that active work. But even if you can't match that, that short-term rental is still available to you, and it doesn't have the stringent requirements of that real estate professional status.
That's really interesting. So, real estate professional status, that's super, super interesting. So, question that I would have to follow up with that, because I'm like the perfect example, right? Like, I
Uh-huh.
run a real estate podcast. I work sort of in the real estate space. Like, I'm not buying and selling houses myself, technically, right?
Yeah.
And even if I did, it'd be through LLCs, right? But for my wife, for instance, my wife stayed home ever since we've been married. We've got 4 kids. How would they quantify whether she is a true real estate professional? I mean, how do they track that you're working 20 hours a week versus people just saying that they do, but they're just stay-at-home parents or whatever?
Well, that's where the rubber meets the road, Stephen. So, I mean, on the tax return, it's as simple as checking a box and saying, yes, I am this. But
Yeah.
when the IRS comes knocking during an audit, that's where you've got to prove it. So, one of
Mm.
the things that we do for our clients or help them out with is building time logs. It kind of sucks, but you need to document out that, I spent 2 hours today going to the 123 Main Street to let the plumber in and meet with contractors on CapEx, or negotiating with the bank, or negotiating with tenants. You really kind of have to really build out that time log, and that's what's going to save you in an audit. But when you file your tax return, it's just a box you check. But if you get audited, you will have to substantiate that you've got that. So if you're on a W-2 and that W-2 is not your business and it's not real estate, then you're gonna have a real tough time proving that. So that's why it's important to nail down that real estate professional status for your non-working spouse if they can. But that's just one of the assets. I mean, a lot ways to do it. We've got a lot of clients where we really work hard on that passive and active structuring, because depending on what you're doing, if you're in deals and things, you can generate a lot of money from passive income and then use the passive losses from real estate to offset that. So there's more than one way to skin that cat, I guess, is what I'm saying.
So let me ask you this, and this is honestly like full transparency. This is a selfish question, but it does come up quite a bit in the circles that I run in, and it's about the vehicle, right? Like there seems to be all this like mysterious. I don't like. I understand 6,000 pound vehicle, like I could write it off, whatever, blah blah blah, right? But obviously, like if you're driving your vehicle 90% for work, whatever, however you can quantify that, prove it, etc. Like especially as you're going out and looking at properties for investors, for example. You're going out looking at properties, maybe you're meeting the contractor out there, letting the plumber in, like you mentioned. And let's say you want to take advantage of, the fact that, like, hey, I like driving in a nice vehicle. I'm in my car 30 hours a week, 20 hours a week, whatever that might be, driving to various properties. Like, is there some red tape people should avoid when they go to, like, looking at maybe getting a newer vehicle and then meeting the actual requirements to have that as a legitimate tax write-off? And does it have to be a new vehicle?
Yeah, no, it doesn't have to be a new vehicle. It certainly can be a used vehicle and get those same sorts of activities. But the thing you've got to really protect against are, are you driving that thing to and from the grocery store? Are you picking the kids up from soccer practice in it? Are you using it personally? And be honest, because, if you got $100,000 G-Wagon that you want to write off, or it's probably more than that, it's probably 200, but
Right.
you're using that for personal use. You got to allocate what's personal and what's not personal. Because the business use of the vehicle is certainly a big deduction you can have. You just have to be, what are you actually doing for it? And,
Hmm.
there are luxury limits when it comes to those bigger cars and things like that.
Right.
But,
My thought
it's,
process is where this comes from. Like I said, it does come up in the circles I run in. But like right now, we just had our fourth kid. Right, my wife's driving a mid-size SUV, and I'm like, well, we probably should upgrade to a Suburban here at some point. But I haven't figured out how I can go get you a Suburban, take the loss, take the tax write-off for it, and it still be kosher for you to drive it around and do whatever else I need you to do for me, running errands and all that kind of stuff, like for our
yeah.
business, but also still be able to pick, my son up from school, for example, if that makes sense.
Yeah. Well, this is kind of where technology comes in play, and what I recommend to
Yeah,
our clients: get an app like Mile IQ.
that's what I
It's
have.
going
Yeah.
to tie into your Bluetooth. So whenever you get in that car, if you're lazy like me, it's just going to record it in the background. And then at the end of the day or the week or the month or at tax time, you can go through there and swipe left or right and tell it, is this a business trip or is this a personal trip? And that then is going to build out the report in the back end to show you
Yeah.
what really is personal and what's business. And then you're going to have that documented. I mean, if you're old school and you want to keep a tablet in your glove compartment and write your odometer out as you start and finish, you can do that as well. But seriously, who's going to do that? I'm a CPA. I'm not even going to recommend that our clients do that. But the apps out there are super efficient for this, and they will
Yeah.
really truly get that. So for like you, if you drive to pick the kids up from school, that's personal. But if you drive to go tour properties or go meet with a set of investors, that's a business trip.
Right. Yeah, and so the other piece of that is obviously like with an audit, for example, I think that's the big scary bear that everybody wants to avoid. And when they get in it, they want to be bulletproof so that way nothing comes up and then they have
Yeah.
liability, right? So, like, for example, with the vehicle, the mileage thing, I think if we're even being honest with ourselves, like, there's some times where I go a couple weeks and then I'm like, oh shoot, I got to go log my miles, and because like
Yeah.
I don't have a set time on Friday morning at 8:30. That's when I log my week's miles or whatever that is. So, like, how do they quantify? Is it really important to also keep a schedule and a calendar of this is what I was doing to be able to pair with those mileage logs to be able to prove that where you were going was actually for business?
Yeah. Yeah. I mean, that's the best rule if you can have that. I mean, these
Sure.
apps can there's a spot to say in there went to have lunch with the broker from CBRE or whatever, so you can write that in there. But yeah, the at the end of the day, let's say you get audited 3 years ago, and the IRS is trying to document what your real estate mileage is and how you got to this write-off of this Suburban you took. They're going to want to know, okay, I don't know the difference from this address to this address. Why is this business and why is this personal? So that level of detail would really go a long way to helping you out. But
Right.
I'm going to tell you, I'm lazy. I'm a CPA, and I advise this stuff to my clients all the time, but I'm lazy. So in my app, it'll pick up that this address is for this type of
Right.
thing, and it'll start remembering that. So that's less work I have to do, and that's worth the whatever it is, $100 a year I pay to have the app, is to have that bulletproof report at the end of the year if the IRS wants to come challenge anything we've written off.
For sure. Love it. Is there anything that we haven't talked about that you'd like to talk about on the show? We're already over time, but I want to give you the opportunity because we did get off in the weeds a little bit. Is there anything
Yeah.
you want to talk about specifically that you haven't yet hit on?
Yeah, no, I feel like you're setting me up for something that I need to bring some sort of knowledge. I will say this: we're today as it stands, and in June we've got a House bill that's coming due, and it's bringing bonus depreciation back to 100% if it passes. And both sides of the aisle, Democrats and Republicans, are certainly in favor of that. And I really, truly, I know a lot of real estate investors know what that is and they want it back. I do think that will help deal flow. I think that will help the real estate market. Obviously, I don't think we're going to see historic interest rate cuts like we had back in 21 and 22, maybe ever again in our lifetime. But if you get more favorable depreciation that's in this bill, I think it's going to be a great time for you to go out and invest. If you've got some powder to dry, to go get whatever asset class you want to, because 2025 is set up for big depreciation deductions. So we're excited about seeing what passes there.
Well, I appreciate you coming and sharing some knowledge on the show, Vince. If people want to connect with you for more or learn about what you're working on, where should they go for that?
Yeah, I guess, email is a great thing. Vince at mytexascpa.com, or go search Vince Porter on LinkedIn. You'll find me there. But, it was great to be here, and anytime you need help, I'm here for you.
Well, thanks again for joining, man. I appreciate it a ton. Hope you guys got as much value out of this episode as I did, and we'll see you in the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.